Okay, just jumping into it. What are we at? It's five past or full past 11 at the moment, and I'll start off with Aussie because Aussie really sort of was the trade through yesterday. It did sort of give this little sort of move, and I mean it's always nice to sort of see the things after the fact of this little move down here, and we've seen this a couple of times on Aussie where it's got this nice support. Looks like, as I said yesterday, going for the double bottom, and then bang, drops down here and then sort of this is just basically a trap move because you can see obviously this is on a 4 hour, but the sort of reversal, look at the size of this engulfing candle afterwards, and this move afterwards is what we were sort of trying to sort of map out earlier, which I'll sort of jump down onto the lower time frames in a moment and sort of unpack it a bit, but certainly it sort of would have snapped out a lot of people with tight stops, technical stops. It would have sort of dragged in some more shorts, and then really bang, pushes up and does the squeeze. And this is what we've sort of seen, as I said, if I jump back onto the higher time frame here, this is what this move was. Maybe it shows better on the weekly. And this is exactly what I'm talking about here, where we called this as it was happening as well. You've got support, drops down here. This is, as I said, on a weekly time frame, so obviously a lot larger, but it shows that they're prepared to do this kind of stuff. Fake it down, trap them up, and then just squeeze the hell out of them. So jump back onto the here and now. It seems like, you know, pretty much exactly the same sort of little move that we had that they've sort of done, sort of just in the shorter time frame. We did see a bit of this sort of support come in here as well, which sort of gave it a nice little platform and bounce. But really, the ones that we isolated and sort of picked out were these lower levels down here at 65.30, and it didn't quite get down to that 65.20 stage. But these obviously sort of provided a nice little base for it to sort of like launch off from. So once we actually did start to get this move, so we can get rid of this one here, and we can sort of have a look at sort of how we were planning this move out. So we had this falling resistance to come down through here, and we knew that 70 was going to be an issue, hence this little circle here. And we can see sort of as it came up here, obviously part of the market said, yep, that's enough for us, and they sort of tried to push it back down, because you can see here, it was support. You can see here, support. You know, obviously you sort of pushed through this area, but it was unable to close under this over here so much. Maybe that was on a 4 hour. We were sort of picking that out a bit more. Sorry, back onto the 1 hour. So yeah, we can see they sort of push down, but again, each time it sort of comes through, takes out that level, we see a nice fast move up to the top side and into our 90s. 90s, as I keep saying, played their part again and knocks it back down. So we've got sellers where we know we're going to be coming in at 90. We got buyers where we are assuming the sellers were previously acting as support, and then on it goes again. And particularly because this is a bit of a sort of like a couple of day going back to Tuesday, so 2-3 day high along this area here. We're past this falling resistance. People will be like, okay, so we'll give it a shot because maybe it'll just end up sort of like finding more sellers here and come back down. It pushed through here, and as it did, it would have hit a bunch of stops, and this is why we got this little spike up the top side of it here. So this was just really just a couple of sort of like stops, short, medium term sort of stops above these levels that would have got triggered, and now we're seeing this slow little drift off to the downside. So at the moment, we are kind of seeing a back test of these 90s area, as we can see coming through here now. We want to see this area hold to sort of really sort of confirm that we are done with this lower area here. Obviously, it's a bit, not massive, but 25 points off this wick high currently. So that's, you know, it's a bit of a move to get up to that, because Aussie obviously isn't a super fast mover. But the levels that I'm sort of looking for here, firstly, a completion of the bodies of these candles here, and then you really want to see this wick taken out here. So first sort of confirmation thing to sort of say that yes, we're going for another leg is to get above 09. 66.09, and then if we take out that wick at 66.20, then we're looking for our price target along here, which even though we did have this little drop down here, I'm still maintaining that as a sort of short-term medium price target, which potentially would also be coming in as we've sort of linked this sort of falling support along this area here. Same angle applied to the top over here gives us a bit of an idea where we may see some sort of selling coming in if somebody is trying to sort of hit this channel to sort of get it to sort of, you know, come back down for another leg. But above 09 and then certainly above 20, they're going to be the confirmations. Price target then at 66.40. And then once we are up around this area here, of course, we've got these higher time frame higher time frame resistance areas around this sort of 66.50 area. So certainly if we can flip this 4 hour here above 04, as I said, this will be the body completion at 9. So yes, they're your little angles here. If you do sort of think about this on a 4 hour sort of time frame here, we've really only had one solid leg up here. So this is just a little bit of a cooling, obviously coming into the end of the US sessions. It just gives it a little bit of a breather to come back here, grab some more liquidity, and then potentially to move forward for another push up to the top side. So I still think that we've got a little bit of a attempt above, a minimum at 66.09 here. But again, you want to see above this to sort of you know, qualify it for sort of potentially sort of moving further up. I'll go across to a couple of the sort of corresponding charts so you can sort of see how these things played out at the same time. I did pick up this negative divergence. I'm only sort of picking this up after the fact here. But if we drag this one across here, this was the last low. This was that little trap low. And we can see, you know, of course, after the fact, it's always good. But, you know, it's good to sort of keep an eye out for these things. You got one low, you got that trap low, and obviously that trap low came in with a higher buying pressure, which gives us the negative divergence. And on a 4 hour, that's strong enough to get quite a decent sort of reaction. So, I mean, you want to, for short intraday trades or intra-session trades, I should say, 1 hour negative divergences are great. You know, you're going to get your sort of 20, 30 points. But certainly, you know, you want them on the high time frame, the better for the bigger moves. And as you can see, this is on the 4 hour, and from the lows, we came up, you know, that was a 97-point move, so 1.5%, which, you know, in any currency, 1.5% in one straight direction, that's a decent move. So certainly that was the trade of the day yesterday. If we flip across, we can see that DXY really played out beautifully here. This was that sort of rising support that we sort of identified, and this is what the horizontal was coming through here. Start of yesterday, we're up over this part here, and I made a point to make a note to sort of say that, you know, despite the negative data coming out for the US, it was still grinding higher. There wasn't really the sort of fundamental backing for why it kept moving up, except for what I could sort of tell was the fact that, you know, it was just grabbing liquidity. People love to sort of go, okay, well, hold on, wait, you know, there's a textbook sort of response to these things, and you'll get those initial moves, but then they'll snap those people out. They keep saying there's no easy money. Well, you know, this is why sort of like, you know, people sort of trading these things are left bewildered because they don't spend enough time looking at the charts and at the price action. They go, hold on, wait, my textbook said this should happen. It didn't happen. You know, there's somebody else on the other end of these trades, and they know what your textbook says. And so they know how, you know, the majority of these people are going to react. And so the pain trade is to push it the other way. But that can only last for so long. And as you saw yesterday, we had a nice little smackdown. This is the little path that we were looking to break for the price to follow. And as you can see, we got this very nicely. So it broke down through here, back up for a retest, came up a little bit higher, obviously up along this zone here, which is really just a retest of the bottom side of this rising support with the confluence of the sort of range that it had been in the previous day. Once it sort of came down here, broke that breaking candle, like this being the breakout candle, up here, backtest, breakout candle here, and it just went and shot right down here. So this obviously sort of fueled a bit of USD selling on all crosses, i.e. on the Aussie, and this is what sort of obviously helped us sort of like push on a little bit further as well. So it's interesting where it did come into to find some support though, because if you sort of disregard all these other little bits and pieces, if we look at this and say that, you know, this is your head. Sorry, this is your shoulder. This could be a head. This could be a neckline. And this shoulder could be an inverted sort of head and shoulders. So it's something to sort of be wary of, because sort of like, you know, if it does push back up, if we do find like this is a fairly decent response in terms of buying pressure sort of coming in, support coming off the lows here. If we do get a bit of a grind and a push up here, and of course we got NFP tonight, if you have NFP with strong numbers that support US dollar growth and strength, and it's not just sort of seen as an opportunity for people to sort of sell into with the pressure, then you know you could be seeing a fairly decent body, fairly decent bottom on here, which really, if this were to play out, let's just put this onto a measured move. That's a fairly chunky move back up above 105.50 for a measured move of this, if this were to play out. So for the sort of, I say the here and now, but I'd say through this session and into the end of the week, the main levels that we want to see are through here and through here. Take out that wick low from yesterday, from where we dropped down. I think that's good to sort of, I mean, you can also say that this left shoulder came down quite low, down over here. But realistically, take out yesterday's wick low, and I think that's enough to sort of negate this move. If it does take out yesterday's open highs, or the close from the day before, whatever you want to call it, I would say this is a good chance to sort of say that this is maybe an actual inverted head and shoulders bottom. So it's a bit tough to sort of make a call coming into things like, because NFP is like a second tier bit of news. It's the same as like CPI. You know, it can set the trend for, you know, the month to come. Particularly this time of year, it can be a little bit sort of funny with flows as well. So certainly be keeping an eye on this at the moment. We got the nice break, we got the breakdown, but that move's pretty much completed now. I mean, you could sort of say that, that was, I would still give us a little bit lower from a technical sort of standpoint to sort of say that that was your wedge. Yeah, so, I mean, I'd be cautious of it anyway. These are the levels that I'm looking to sort of see break for next sort of direction. 103.20 or 104.20. So yeah, a bit of a wide range here, but I think that'll sort of really sort of confirm whether we're going to be targeting 102.40 for the lows, or whether we may be seeing further gains coming back up here. You got to remember topside as well. We've also got a bit of resistance here where we know sellers are, but you know, large bits of news can negate technical levels, like as we've seen plenty of times. I mean, this most recently, that's the CPI. It didn't care about this support down here. It just chopped all the way through it. So yeah, certainly that's what I'm sort of looking for coming into NFP. Gold is just chomping at the bit and really trying to sort of break up, but it's sort of like it's just got these sellers that just are, you know, they're not letting it go. Like we got this nice little break yesterday, and you know you can see here, this is why we marked the levels out. We wanted to see above 41.50. It got to 40. I caught a nice position here. I took a little bit off because you know I was like, you know, if this thing does fall over, I don't want to sort of be watch it go up and then watch it go straight back down. And that's exactly what it did. It, as you can see, look at this rejection here, and it just went bang. Thought about it for a little bit, came down here. I actually picked up a couple. I think it was around 21. Yeah, just for a little trade. Sort of got out at 30. So yeah, look, it's one of these things. I mean, gold. Obviously, there's still a lot of people that would be up around this area here. We've got this very sort of unrelenting sort of grind here with this big sort of head on here. So they're not going to let people sort of get out of these positions easily, and certainly I would not want to be stuck above 21.20 kind of thing, 21.17, because that's just wick country and never seen before wick country as well. So all-time highs at 2075, which is about the same as the monthly open. Is it? I haven't actually done the monthly. Where was the monthly open? So this is the monthly here. So I'll mark that one out. See where we were at. Yeah. Oh, I don't have it monthly. Here we go. Okay, monthly open at 2036. So, I mean, there's certainly arguments to be made that at least come up and sort of test that sort of monthly open again. So obviously we want to get the sort of move up above sort of 41 for the short time frame. But where we at? Flip back to a bit more sort of where we are here now. We are seeing this nice little bit of a swing around here at the moment with a couple of little bullish days coming in. But again, NFP coming in tonight, that's just going to be the driver. We see the sell-off on US dollar. We're going to sort of see gold have another push up. And pretty much these same little price targets are where I've sort of I maintain the sort of more sort of short-term targets to be. If we can get back up above, what was previously all-time highs, 2075, I think that bodes very well for a big push up. And certainly if we can close above 2088 on a 4 hour, so if we close at say 2092, this is obviously sort of thinking a little bit forward, $60 off this at the moment. If we can close above these bodied candles, then the obvious target then would almost be wick completion, so the 2045. So put a little alert around here. Yeah. $20.50 and change. And certainly if we get a close around here and we get a big move up to sort of look to fill that, that's still a $50-$60 move in that. That is a massive wick. That price action was just incredible. But yes, so the here and now, again, we want to sort of see that we can get back above this area here because we've seen, as we've sort of, pointed it out, it's been sort of support, support, support. Now it's being resistance, resistance, resistance. Every time you tap into this level, and this was a nice strong close, so it really looked like it could have done a little bit of damage here. But of course, bang, no, there was no easy money, and they just snapped people out. So, sort of seeing a little bit of sort of buying early Asia session. But the big thing will be this sort of this close above 38. Well, realistically, take out 40, so which is yesterday's wick high, and then as I said, 2050, and then the 38 retracement at 2060. The sort of more sort of short-term, medium-term, whatever you want to call them, goals, price targets, which I think is definitely achievable. I don't think, I mean, if you think back to sort of when we had, where were these other wicks? So this one was back in May. So it's quite a sort of like, what I mean? This was the banking crisis? I think it was with this one. These sort of things are the drivers that get us up here. March 22, so way back then as well, that was obviously Ukraine. So when Ukraine conflict kicked off, and then we got the banking crisis, got us up around here. But if you look at this actually, now that I sort of have a bit of a look on a weekly, obviously this was a big solid candle here. This could just be a back test. Let's get these out of the way for now. This is very much obviously a solid bullish close, which we know, right up to the top, and then this is all stops being hit. But realistically, if you look at this on a weekly status, that's a breakout candle by anyone's means. This could just really be a back test at the moment before we sort of see another push back up towards 2075. I'm still in the camp of higher for gold. I don't think you're going to see all this sort of momentum and flow just go boop. But I'm sure everybody was thinking the same with these areas here as well. But you know, the drivers that got to these things was, as I said, this was Ukraine, this was the banking crisis. Those they kind of alleviated, well, somewhat. You know what I mean? Of course, Ukraine's still partly going on, but as we saw with the Middle East sort of situation, which is actually what was the initial driver for this big move here, on a fundamental basis anyway. Um, this kind of dropped out of the news. You know, even sort of Middle East has sort of dropped out of the news, but gold is still going. The banking crisis, which was like, you know, more small regional banks running out of cash, that dropped out of the news. Well, they alleviated, fixed it, whatever. So Middle East situation was driving it here. Middle East situation's dropped out of the news, and gold is still going. So now you got to think, what is it that's driving gold through these points here? And this is what I've been saying, you know, for the last couple of weeks, that as the US dollar sells off, that capital, that cash has to flow somewhere. And gold has been the chosen, well, you know, amongst other things. I mean, equities are also pumping, but gold has been one of the big choices for where that money is going to flow. And so that's not a sort of like a flyby kind of driver, as to sort of say, like sort of how you know, the Ukraine war or the banking crisis, they sort of went away, or the desire went away for it all. Middle East has gone away. As far as the market is concerned, it's gone away. It's not a driver. People don't care, or the market doesn't care, and it's still moving. And US dollar selling off and pushing and driving gold, well, that can continue to happen. You know, there's no reason why US dollar can't just continue to sort of sell down. And if that's the driver, well, you know, by in that sort of logic, you could continue to sort of see that funnel into gold. And so I do think that we still have a little bit higher to go. Minimum of retest of these all-time highs on these weekly candles here. So that's a little bit of my sort of forward thinking with gold. Of course, you know, we've got these little levels we've got to get through first, but I certainly am looking more for upside and buying dips on gold than trying to sort of sell it to sort of come back down here. I mean, honestly, look, this is a bit of a triangle. Tried to get out, faked it. Well, faked it, sort of got knocked on the head. So, you know, a triangle favors the direction it came into it, which is negative here, which is a bearish move. So, you know, that by all standards, that would sort of favor a downside here. But I'm not looking to short gold. Not at the moment anyway. Cool, and all right, so flip across. We had copper. Copper ripped it yesterday as well, which is a great sort of call with this channel. And yeah, it really sort of came up here. We could see, as I said, this is the sort of course of price action that we're expecting. So here was open yesterday. We were expecting to come up, make connection with this falling resistance, which it did. Of course, obviously sort of ground along here and then came up here and did it and went bang, knocked back down. Buyers stepped in at a higher level, as you can see, with the sort of RSI as well. Didn't really allow it to sort of get too low, and then bang, powered it through. So it's back up into this little zone now. We want to see a sort of bit of a push past here. Ideally, you want to get past 382.50 and change, but certainly back up into this little range that we saw previously, and the fact that it broke from this little falling downtrend channel is positive in the short term. You just want to see that little continuation with it all. But again, this is sort of going in line at the same time as US dollar was sort of selling off. So yeah, if we can see a bit of a push back up in here to sort of prove itself back up into this range, I think sort of if we can take out this little level here, so if we can see, I mean, don't typically trade copper on a 1 hour time frame, but you can use this for a bit of a little confirmation because, again, you know, we've seen buyers are here, sellers are here. So, you know, it stands to reason that we would sort of, if we do get a push up to the top side, sellers are going to be here again. So get rid of these ones now, seem to be a bit obsolete. Actually, no, I'll keep this one on because this sort of goes to show same sort of thing that we had down here. Channel comes, breaks out of it, and then fires back into it. Out of the channel, and look at this drop down out once it is out of the channel, fires back into it. So this could very much sort of be playing into the type of repeat sort of price action that we may be sort of seeing with copper. But I mean, again, this was a, well, how far did we actually go in the end? This was a you know, a 5% sell down. That's a pretty heavy sort of sell down. So, you know what I mean? It came off the 61% of this last leg through here. So it was due for a bit of a bounce regardless. So it's not sort of confirmed that, you know, it's out of this. But the fact that it's broken out of this little downtrend channel, it's pushing up back up into this horizontal sort of range. I think that's got to be respected, and there could be a little bit more sort of upside to come here for sure. And finally, just with China, it's trying to hold this area, but this is what we were saying yesterday. There was this little bit of a negative divergence coming up to this area here, and this is why we're saying, look, we're up in the top side of this. You know, we know the sellers have been here. So, you know, that along with this kind of negative divergence, this push up here, although it didn't make a new high, it definitely was coming in on lower buying pressure. And we got a break of this little channel. It took out the lows down here, but of course it's finding little bits of buying sort of through here. So China just back into a little bit of a super short term grind mode. We take out yesterday's lows. Bottom of the grind range there. And obviously we're seeing a little bit of sort of selling early in Asia session. All right, cool. That's about it from me.